Welcome to the Moonbird Trading Channel. Yeah, I am the moon, you guys are the bird. I'm giving you the right to fly, trading light. Okay, today we are going to be talking about from Barter to Bitcoin is a 400-year history of trading, how trading started, where it's going to, and why it will never end. So this video is not a strategy or anything, it's just financial entertainment. Yeah, financial entertainment. I'm going to give you a history, but it won't be a textbook history. I won't bore you guys with so many dates and quotations and things like that. No, I'll just summarize everything in such a way that you can just understand how trading started and where it's going to. So because trading is not all about money, so if you agree with me that it's not all, matter of fact, you have to put money aside in order to learn trading. So I believe this one of the things that it's good we know the history of trading. So going straight into it, the first trade was a promise. It was just a promise, and this happened so many years ago, about 400 years ago. This happened whereby you have a situation where there is a farmer. He will take grains with a promise to pay when he or she makes an harvest. So like value will move but goods will not move. Like people realize that value could actually move without goods moving. So now there was a need to create markets, to create a market where swaps could take place. In places like medieval France, Rome and Greece, people will come together. Probably somebody will come with clothes, maybe some will come with agricultural products, another will come with probably coins from another city, and they will make those exchanges. So that was how the first market was created. What we know, what was known as the Big Leap. The Big Leap, a Dutch ship. This ship was very expensive. A Dutch ship was created, and this ship will move to places like Asia and so on. So this ship was so expensive for one person to purchase or to own. So pieces of this ship now were being sold to the public. People like farmers or anybody who had the money could buy a piece of that ship. That was how the first stock was created, owning pieces of the ship. So you could buy a share in that ship without necessarily passing through any king or any bank. Also had the coffee shop. The coffee shop, in places like London, you will have a big room with traders shouting prices across the room, shouting prices and so on. And you will be surprised to know someone like Isaac Newton, he took part in such trades. Yeah, Isaac Newton, he was a genius. Like history knows him as one of the greatest inventor. He was a genius and so on. And you will be expecting that if he took part in such trades, he must have made so much money from it. But you are wrong. You are definitely wrong. Actually, Isaac Newton gave up on trading, like most people do, like 90% of people that start trading. He gave up, and what he had to say about trading was, he said, I can predict the stars, but I cannot predict the madness of people. So indirectly, he is referring to trading as madness. So in order for you to succeed in trading, as per Isaac Newton, you have to be a madman. Anyway, that's Isaac Newton's own version. But we'll look into that again some other time. Yeah. So we had the coffee shop, and with the coffee shop, there was need for speed to be created in the market. There was need for speed, and that's how the telegraph, and the ticker came into place. The ticker was a machine that would print out strips of prices. So in places like New York, where the prices were being published, it would take just minutes for people in London to have that to know the same prices. So speed now came into the market. We had a crash, and this crash, it took place in 1929. So stocks were going up parabolically, like it was a bull run for stocks and so on. So many people got into trading. People were buying stocks. Even shoe shiners, they were being given tips to buy stocks and so on. So everybody were buying stocks, buying, and it was going up. Nobody knew it would go down. So one day, boom, just like it happens, the market crashed. Price started falling down. As the prices were going down, people tried to sell at the same time, but there were no buyers. So the price was just going down, 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 down. Matter of fact, it took the market about 1 decade for the market to recover from that crash of 1929. And that's how the SEC now was born. The SEC was born in order to regulate the market and also to check traders and prevent people from cheating. The computers now came in. With the computers, the coffee shop and everything disappeared. We never had a room now with traders shouting prices and so on. The computer came and the floors disappeared. In 1971, we had the Nasdaq opening. The Nasdaq was the first stock exchange market, and unlike the coffee shop, where it was full of noises with traders shouting prices and so on, the Nasdaq was just a room with just computers and cables and no traders shouting prices. That was the first stock exchange market. And by 1990, anyone who had a computer, you could trade from your computer at the comfort of your house, at the kitchen, or wherever, without necessarily passing through a broker, putting on fancy tie or so. So trading now, you could like trade with the speed of light. And today we have mobile phones, we have crypto. The crypto market doesn't close, it's open 24/7. The forex market is open during the week, and we also have the Reef. The Reef is a market that is open 24/7 also. This is a chart of this is a weekend, Saturday. I'm still looking at the Reef to see if I can have a high probability trade setup. So we need to appreciate where we are at today, because back in the days, to trade wasn't that easy and it took a long time to trade. But now, with as the speed of light, you can place a trade without passing through anybody. So trading started a very long time ago, over 400 years ago. But then, one thing hasn't changed. Human psychology hasn't changed. Human behavior hasn't changed. That's why books that were written so many decades ago on human psychology is still relevant today like it was written today. Because human behavior hasn't changed. Back in the days, what the trader wanted was to buy low and sell high. It's the very thing we are doing today. We are, no matter our strategy, whether trend line, fair value gap, or whatever thing, fundamentals or whatever, like we want one thing. We want to buy low and want to sell high. So that behavior, it's been there throughout history and it will never change. We have human behaviors, we have greed. That's a personal demon of mine. That's something that is dealing with me. I'm still fighting that. Even the best traders, they still deal with those things. Greed, FOMO, fear, all of that. So the psychology of trading hasn't changed at all. The only thing that has changed is the tools and the machines that were being used. So going further, we are going to be looking at those human behaviors, those psychological aspects. Even with time, I might share my strategy with you guys, but then I just believe a good strategy is as useless as nothing to someone who doesn't have discipline and the right psychology. So we will be looking at all of those things in this channel in order to make us better traders. So this is Moonbird Trading. We will be dropping articles very frequently. subscribe so you don't miss on that post notification, so you know each time I drop a video, and like this button and press the like button so you'll be getting more videos from us. Thank you.